quite a rejection, but starting to look like one here on the 1 hour for ES. Pooties and tooties fell below its moving average, so what what appeared to be a fairly weak bounce is turning out to be a fairly weak bounce. This price action into market open largely due to just Delta getting squeezed up and bears being wildly unprepared for a 100+ point move overnight. So most of the delta squeezed off there. I would say if we slip back below 69.65, we could confirm this rejection. We're not there yet, so plenty of time to establish support at 69.94 or at 69.95 and then move higher. Obviously, this is a lower high still, so no reversal off of Thursday's drop on open. But we did reverse the downside here. So short time frame, yeah, we got a reversal, but longer time frame, we don't have one yet. At least nothing back to all-time highs yet. Out here we closed, just under the implied move. Obviously the small bounce off gamma neutral, kind of fading. That's usually a bad sign. If we see gamma neutrals on the weekly and monthly continue to move closer to spot, remember that gamma here is pretty thin, so that increases the chance of a failure because the market maker is obviously not supporting this move to a significant degree. And I think if we took a look at the gamma curve, being up here where we're at 67, 60, 75. We closed about 75. So there was about 12.7 billion gamma, which isn't very much. So this could very easily slip back below. I know spot moved down in the pre-market. We're at about negative 8.7 billion, closer to market open. So about 20 billion gamma GEX exposure gained over the course of the day. But it's thin, right? So I mean, unless it's 20 or 30 billion or greater, that's still fairly thin gamma. So mean reversion to the downside is still pretty easy here. We would want to see gamma pick up pretty substantially. And that probably wouldn't happen until spot got above 7,000. But yeah, we'll see if that continues to fade in the overnight. I don't have a lot of the indicators on this computer that I have on the other one. But I do have USD JPY, which, obviously after the big move down, anticipating Fed intervention, Fed and BOJ intervention, we saw things deleverage, but that seems to be leveraging back up on the front end also. However, the forward yield on volatility is now more elevated. The silver haircut, or I guess kind of risk profile, flipped negative with Friday's sell-off. We continue to drive more negative today. However, that reversed in the intraday today. It's starting to normalize again. If we start to see that move back positive, cost on the carry is going to go up. But right now, cost on the carry way down, negative 14% versus where it was going into Friday, which was negative 18%. So a pretty significant change there on the cumulative margin costs. But the carry P&L is kind of peaked and starting to fall back. So we might see precious metals start to surge. Well, actually, I can probably do this. XAU USD. We can see what gold looks like against that as well. Let's do Rwanda. There we go. Yeah, gold's similar, but not as much. And gold's probably significantly more important here. This is still around negative 2%, so it is climbing back, but that positive edge on gold, or the gold short, is kind of helping people in the carry right now. So we may see leverage continue to pack on there until that normalizes a bit. The VIX correlation fell. A lot of put selling today. There was a big drop between VX and cash VIX. We did see that spike at the end of the week that I thought we would, as we started to turn around intraday. But that got crushed. Everybody sold the shit out of this big spike in vol that we got overnight. And yeah, so overall correlation down to 84. Um, Still very high, still highly correlated. The end of the month SOFR print showed that the spread got blown out a little bit, but only 3 points. This is significantly less than what we saw like end of December. End of December, we had, I think, like, what was that, 6.5 to 38.7. So it was like a 22 point spread versus 3 now. End of March will be more important for looking at this and seeing how the Fed's balance sheet rollover is really helping them manage risk. But right now, not very significant. On the technical side, we snap back up, bouncing off the EMA 30, which we crossed in the overnight to the upside. We actually did test the 50 MA on ES, or well, the SPX 50 MA level on ES. Plenty of buyers there, apparently, even though we seem to be lacking them at the 20 moving average on the 30 EMA. But opening above the 30 EMA pushed through the 20, almost all the way back up to the trend, a bit short of the all-time high, and that is not level. But 69.88 proving to be a bit of a resistance. Pulled back off that. I mean, if we get back under 69.20, kind of bearish, but we're not there yet. So I would say we have a ways to go to the downside to confirm any kind of confirm the rejection here, at least on the daily. On ES, that's a little shorter term. That's more around like the 69.45 level where we saw last week's close. But be cautious if we do get that pullback. Like if we get a pullback towards like 69.17 and then find support, this will probably move to a new all-time high. So that's it. We got a lot of data this week still. I know we have tomorrow specifically. We have what do we have intraday? We have like the logistics managers index, and then we have JOLTS just after market open, which will be important. I think Barkin's speaking tomorrow, and then I think we have the Red Book print in the pre-market. So a little bit of stuff there. Tomorrow night, not much. I think there's a Japanese bond purchase from the BOJ, so that might normalize the rates a little bit more. And I think that's it. So that should cover everything. I mean, I'll see you guys tomorrow. Looks like oil and utilities not doing too great. Tech running pretty hard. Financials doing pretty well. Obviously the producer manufacturing killing it off of today's ISM numbers. And retail trade doing pretty good. Which is weird because consumer confidence levels are kind of in the fucking toilet right now. So I guess we'll see what Friday's report brings, but probably just anything high beta running right now on the pump. Obviously, Friday's stuff reversing. I still think there's going to be after effects that we see from the massive drop in silver and gold. I just don't think they've been realized yet. Remember that a lot of bank exposure to net short like silver and gold is because people are long silver and gold. So they're hedged on their balance sheet for that, but their exposure is going to look largely short. And so they're not they're not making money off this. I want to at least say that much. That's kind of a misassociation. It's usually just because they're dealer side. And I think that's, yeah, that should be everything. So thank you guys so much for tuning in. I'm glad to hear Palantir's up. Awesome for them. And I will see you guys tomorrow. Later. Do I have an outro? I might not actually have an outro. Just gonna have to do this the old fashioned way. But that's weird.